Okay, Phil, we are here. It's June 5th, 2025. We've got a lot going on in the real estate market right now. We have just been through a rate hold. So the government holds its key interest rate at about 2.75. So fixed rates on a low end, 3.89 to 4% for a 5-year fixed. And then variable, we're seeing at about 4.25%. So the government holds its key interest rate. That's a good indication that there is some uncertainty in the market. And they're not just going to lower them willy-nilly.
Yeah.
Okay.
Very true. In the announcement, they said it's an unusual time themselves. So the Bank of Canada seems to not really know what's going to be going on next.
Yeah, it's. I think Tiff Macklin's got his hands full.
Yes,
he's up, he's down, and we've really got ourselves into a little bit of a mess here. And I mean, hopefully, there is some light at the end of the tunnel. We've been talking about interest rates now more than I ever have in my whole 16-year career. For the first 12 of them, I didn't even pay attention to it. But I guess for us, there's two things right now that are governing the real estate market. We have the interest rates, and then of course we have the tariffs. So we just had Trump increase the tariffs on metals to about 50%, and that's a big staller right now for us in our industry because there's a lot of uncertainty with certain people's jobs. So. And I think too, a lot of the news and a lot of the media is projecting this as the market, the sky's falling and the market's going to go to hell in a handbasket. And one of the things we're here right now is so we can kind of discuss how that's affecting real estate. We know unemployment's up to about 6.9%, and typically when we see unemployment go up, real estate prices go down.
Yeah.
And it is very much on a month-to-month basis. So that's why we're gauging it. So, contrary to the media, we are going to break down the numbers in some of our service areas. So when we look at, let's just take Guelph, for instance, and we're in a very unique area because we do have a lot of the GTA areas do have an effect on us, whether it's Brampton, Mississauga, Georgetown, Milton. I know Milton's not in traditional GTA, but what happens with those areas are those prices get so high, and just based on affordability, then everybody comes our way.
Yeah.
And typically what we see in Milton, Mississauga, even Georgetown, Brampton, is that if something's happening there, we can know it's just a matter of time before we see it here.
Yeah.
So those markets do have an effect on us, whether it's negative or positive. So like when we look at Guelph, and we thought it would be key to go back 3 years. So everybody's talking about increased inventory now, right? And I think that's really polarized with the tariffs that are going on.
Yeah.
But even in 2023 to 2024, we had a lot of increased inventory as well. So if we look at Guelph, 2023 to 2024, we saw 108% increase in the active listings. So it went from 253 in May 2023 to 527 in May 2024. Okay, so I don't remember last year everybody thinking there's so much inventory. It's a buyer's market. Now the first thing out of everybody's mouth is it's a buyer's market.
It's a buyer's market.
And it is, because most of the inventory that we're seeing in our areas is over 3 months and into the 4 and the 5 month realm.
Yeah.
But when we look at the actives in Guelph from 2024 to 2025, right now for May, we have 558. So that's an increase of about 5%.
Yeah.
All right. So it's not a huge increase. Guelph is actually faring out quite well. But the only thing to consider is what our sales are doing. So over the month to month, so this time, or May to May, this time last year, 39% decrease in our sales. But then over the year, from January 2024 to May 31st, and then January 2025 to May 31st, we saw a 41% decrease the same time period last year.
Yeah.
So we haven't actually seen that much of an increase in our active listings in May, but we have seen a substantial decrease in the sales.
Yeah.
which seems to be the trend. The decrease in sales seems to be the trend, but the increase in inventory is the big trend as well. And it seems like Guelph now is starting to come back down to last year's numbers.
Yeah.
Okay. And then something for Guelph to notice as well is the months of inventory is about 3.3%. So what does that tell us?
3.3 months. I mean, typically in any normal market, 3 months is great. It's a balanced market, actually leaning towards more of a seller's market, but we're just not seeing that.
Yeah.
Right. And again, it's one of those things where last year you were right. The inventory skyrocketed last year, and nobody batted an eye. And I think it's just there's a lot of negativity surrounding the market this year.
Yeah.
So when people see higher inventory this year, they're like, what happened? Not realizing that actually last year the inventory pushed up a lot more versus 2023 than 2024 versus 2025.
Yeah.
So I think it is really driven by the pessimism in the market and mostly the uncertainty.
Yeah.
With tariffs and with everything else going on, people just don't know what's going to happen, right? And that's driving that pessimism. But if you look at the numbers themselves, they're, there's reasons to be pessimistic, but it's by no means a disaster.
No, and I mean, I think too, like buyers are really hard. They're hard to really get a read on because, to me, I'm looking at it. Prices are down, inventory's up. Let's go buy a house. And in the back of the buyers' minds are, you know what? Maybe we'll wait a little longer and the prices will go down even more, right? So we just don't know. And when we look at tariffs, all the everything in the news, it's talking about 50. Everybody thinks it's 50% increase on everything that comes in, but like it's let's just say it's a beer can, for instance, and they're getting aluminum from the U.S. It's a percentage of that product, right? So if that beer is $3 and the percentage, the can is 10% of the whole makeup, then it's 50% of that 10%.
Yeah.
Right. So it's not like, so a lot of people out there, like I talk to people and they're like, geez, 50% of everything coming in. Yeah. We've kind of got over that whole mentality. Yeah. And even in the car industry right now, I mean, I'm conflicted because they have put a pause on that as well, right?
Yeah.
From what I say, but I'm conflicted in the sense that car prices are high.
Yeah.
And that's why people just aren't buying them right now. So car sales are down. Is it a direct result of the tariffs, or is it just speculation?
Yeah, I mean, car prices are likely to keep coming down. I mean, in the same way that people say real estate prices, because cars just, over COVID really exploded in price. And we have to remember that the tariffs are going to impact American consumers because our guys are sending our aluminum and our steel over there, and then they're getting tariffed by the U.S., right? So we're at this point, I'm not sure. I don't think we're tariffing the steel and aluminum coming into Canada.
No.
It's them who are going to be hit. So we just don't know what kind of effect that's going to have on our economy. It's more likely to have a jobs effect than a real increase in prices that we're going to be able to feel.
Yeah. So
it might be more of a unemployment tick, which again, if you look at our unemployment versus even the U.S., it is looking pretty bad. I mean, we're at 6.9%. I think the U.S. is at 4.5%. Now, typically the U.S. always has a little bit of a gap between us, but this is 2.5% is quite a larger gap than we've had in a long time. So
I think that's important. Like we have already talked about, the inventory is increasing like slowly. It wasn't just tariffs, it's slowly been increasing.
Yeah.
Where sellers are thinking, okay, this is the year. I'm going to go through some numbers in a second, but a lot of the sellers out there too now, it's always like I can remember talking to sellers last year and they're like, we're going to wait till next year. We think the market's going to be better. And now on average, we're down about 3% across the board. So now, they have to, the market has to go up 3 for them to get back to even where they were last year.
Yeah.
Right. And I think that everybody has this premise where, well, if a property can be this high one time, then it'll do it again. And I agree, but it's just how much time will that take for that property to get up? And everybody has this COVID hangover, and especially sellers, they can't get that out of their heads.
Yeah.
And these numbers that are like, I need this out of my property, or I need this out of my property, it doesn't really equate to what market value is. So I
Yeah.
think, we talk about buyers, but we also talk about sellers too. Like some sellers need to come down to reality. And it is true in our market right now, right? We are seeing when a property is priced right, they're getting 96, 97% of list. And depending on the price range, it's selling within 30 days.
Yeah.
Right. So I think that's important for a lot of people out there. Like how many of these listings on the market that are sitting right now are overpriced?
Most of them.
We don't have a figure for that.
Yeah.
I would love it, but we don't, unfortunately, right? And the other thing that we're seeing too is terminations are up over 60%, and that's just because people aren't getting the prices that they want. Those guys don't need to sell, and they're like, you know what, we're going to take our homes off the market. But the market needs to move, right? Whether you're buying for you're upsizing, you're downsizing, there's something's happened in the family or whatever, or jobs. It always needs to move, which I find is a great part of our business. It's just navigating that with people's comfort levels.
Yeah.
Right. So when we go back down to numbers, okay, I can look at when we talk about some of the bigger areas, like let's just jump to Mississauga, for instance. Okay, we get a lot of people in our area that are coming to Mississauga, and we look at the active listings. So in let's go back to 2023, there was 1,053 active listings in May. Then in 2024, they had an 81% increase to 1,908 listings, and then now in 2025 it jumped 40%. So from May to May last year, it's gone 43% up, right? But once again, nobody was talking about that 81% increase in inventory jump last year, which I find interesting. But I guess it was subsidized with more sales. So people weren't seeing as many for sale signs because they were selling. So when we go back to the solds, from May last year in Mississauga, it's down 25. Sales are down 25% just in May.
Yeah.
Right. And then, but even before that, in May in 2023 in Mississauga, they were down from 2023 to 2024. They were down 25% again. But we don't see that talk because we still had the interest rate issue. The only thing we didn't have was the tariff issue. Yeah. Right. But if we go to sales over the year, right, they're down 23%. So we have increase in inventory of 43%, and then sales are down 23%.
Yeah.
Right. I think it's interesting too to note for anybody out there that's looking at different areas. There is a distinction between different areas, right? How much inventory is increased or decreased versus how many sales have increased or decreased. But with the larger city centers, there's a difference in the type of inventory that they have, right?
Yeah. They typically have a lot more condos, which condos are the toughest sell right now. And they have a lot more investors buying. So you see these big high-density condos in Mississauga. A few of them have popped up in Milton recently as well. And again, those are just not moving. When you go to a city like Guelph, you have some high-density condos, but most of them are low density. They're 4 stories, and they're in a suburban neighborhood. So you just don't see the same kind of glut of inventory in that sense.
And we are seeing a larger decrease in price in those condos, right? So in the larger cities too, there's more investors.
Yeah.
Right. So the cash flow on these properties just aren't there anymore.
Gone.
And sometimes lately what we're seeing is someone had bought a condo in 2021 and now it's just built in 2025, and there's negative equity now in those properties.
Yeah.
Right. So you can get a hell of a bargain on a condo property too, and the condos are really affecting certain price ranges too, right? Like they're affecting those numbers that everybody talks about when we do national averages, because it makes the numbers look even less.
Yeah.
Right. So if we jump if we jump to the smaller communities, we don't see as many investors buy rentals in those communities. Like I know some of the smaller areas like Acton, Rockwood, Erin that we trade in, they don't, like if you're trying to find a house to rent, there's hardly any of them that come up.
Yeah.
All right, they come up every so often. There's a few apartments over storefronts and things like that, but it's not a community where you're like you have a basement apartment and you're renting it. You'd see that a little bit more in Guelph because of the university.
Yeah.
And you do see investments surrounding that university area in Guelph, but in the smaller communities, that's just not something we see.
You really
right?
don't.
So if we continue on, like we look at like Guelph Aramasa, for instance, which includes Rockwood, Eden Mills, and the country areas, their inventory, they have an increase in, they had an increase in inventory from 2023 to 2024, and that was 128%.
Yeah.
And we never heard about that. But in the inventory right now, it's actually lower. It's 22% lower in inventory, but the sales are down over the year 38% and over the month 30%.
Yeah.
So so some places there's less inventory than last year, but then there's also less sales.
Yeah.
Right. So some areas, if you look at that way, less inventory, less sales, they're kind of working in conjunction with each other. So some areas are faring a little bit better than others. But if we jump to, so that was Guelph Aramasa. If we go to Milton, like Milton seems to be hit pretty hard. But from 2023 to 2024, inventory rose 120%. Then from 2024 to 2025 this year, inventory is up 36% in Milton.
Yeah.
Right now, the sales are down in May 27%, and then 31% over the whole year.
Yeah.
So it's pretty consistent. We're down 25, 30, 40% down. Right. That seems pretty consistent with most areas. And then when we look at Halton Hills, for instance, which includes Georgetown and Acton, we see an increased inventory from 2023 to 2024 of 91%, and then increased inventory 24 to 25 the same month in May 16%. All right, so there was more inventory coming last year. I think once again it's snowballing, right? If every year you're getting increased inventory and now this year you're getting less sales, it's pretty apparent when you drive around these communities and you see all these for sale signs and people are like, nothing's selling, everything's sitting. And I think it's important, like things are selling. Like you do see all of a sudden the sales come, and it is very hit or miss market in some ways where we'll put something on the market and then it sells in 5 days, and other things that we think is going to sell takes 60.
Yeah, and it's really skewed because the months of inventory do look low. But again, if you take May in Guelph this year, we had 170 odd sales.
Yeah.
And then active listings in Guelph are about 550.
Yeah.
So you divide that number, you divide 550 by 170, it's 3.5 months. Again, May is the busiest month of the year typically. Yeah. So as we get into the slower months, that months of inventory level will creep up.
Yeah.
So it is a little skewed that way. But yeah, I think a lot of it is, in 2024, I mean, you can vouch for this. There was a lot of optimism saying, once interest rates come down, all our problems will be fixed. So we had a lot of sellers in 2024 telling me and Tyler, like, listen, next year, spring is going to be gangbusters.
Yeah.
Things are going to go crazy again. So, we had a lot of sellers saying, we're going to wait till spring 2025. Everything's going to...
And we very much thought that too, right? Like we've had two interest rate holds. Yeah. Like there's no doubt in my mind, had we have had an interest rate drop yesterday, right? Yeah. On the 4th.
Yeah.
Nothing would have changed.
Yeah.
Right? It would have gone 0.25%. Nothing would have changed. Nothing's changed now. But, we always have that, that optimism where last year I thought, okay, geez, if we have two interest rate drops, now all of a sudden all of our rates are in the threes.
Yeah.
Right. And then one more by the end of the year, we could have 5-year fixed at 3.5.
Yeah.
And then we could have our variables in that 3.75%, somewhere around there. It just hasn't happened yet. And the reason that they haven't dropped that is because they're being a little bit more cautious of what's happening with the tariffs, right? I wish that they were that, like I wish Tiff Macklin and the Bank of Canada were that cautious during COVID.
Yes.
To have these rates drop down to 1.5%, it was just a silliness. And I think everybody kind of realized that. now. It just, it inflated these prices where it was really non-existent.
Yeah, and now again everybody has to renew, and I guess a lot of people were hoping they would renew at 3.5%, 3%, right? But it just didn't come down as much as a lot of people thought, right?
Yeah.
So a 5-year fix now, because the bond yields have gone up a little bit, you're looking over 4.
Yeah.
Right. So it's it's not terrible.
3.89 the other day.
Okay, 3.89 would be nice. Yeah, but it hasn't come down as much as a lot of people thought. I've always said that 3.5% is kind of that Goldilocks zone for fixed rates, right?
Yeah, and it's the zone where it's comfortable for people to purchase and spend a little bit more money, and house prices start to increase with that general appreciation, right? Like for years, 5% a year, 5% a year, 5% a year, not 25% a year.
No.
Right. So I always bring this up because I can't help it, but I had a conversation the other day from someone from Guelph, and she had bought her place for a pre-build in 2019 for $825,000. And I think it's worth 1.3. And I said, well, I don't even need to come to the house to tell you it's not worth 1.3.
Yeah.
And just the words out of her mouth were, well, I won't sell it for any less than 1.2.
Yeah.
And there's a direct sale that's a couple streets away, the exact same model, listed at 1,175.
Yeah.
So most likely that'll sell at 115.
Yeah.
So she bought it for 825, and now it's worth 115, and they think that's a loss. Just because of the way the market went up, and then come back down, right? So I just and then go back to sellers and value. It's like, if you want to wait, you want to wait. But there is no guarantee, and I think this year alone and the last 3 years would tell you there's no guarantee that the prices are going to go up.
Yeah.
And we know the market now. You sell in the market now, especially if you're buying something else.
Yeah.
Right. Like you were talking to your client about a townhouse the other day. Right.
Yeah. And it's all about the motive of the seller, right? My seller had purchased a condo in Kitchener a while back, and he texted me yesterday and he said, crap, Philip, my condo once sold in the same unit sold in the building, and it sold for $10,000 less than I bought it for. And I said, okay, we've been looking at some townhouses in the Kitchener area. And I said, listen, look, the townhouses 2 years ago when you purchased are selling for $60,000 less than they were then. So of course you're going to take a little bit less for your condo, but also if you would, if you had purchased 2 years back, you would have been down $60,000 in that townhouse, right? Yeah. So, it depends what your motive is, right?
Yeah.
He in his situation, he bought for a good price. Again, it's down a little bit, but he's also going to purchase his next property for a lot less than he would have 2 years ago.
Yeah, it's an interesting concept to say, well, you're losing $10,000, but you're ahead of the game if you're going to purchase again.
Yeah, if you're going to purchase again, and that's the key figure. If you're going to sell and then you're saying I'm going to rent, that money's it's gone, right? It just is. You take your losses, and if you want to go rent, you go rent, but. His motive is, he wants to grow his family, so he needs a bigger space, and he needs to move to that space. So, he would have paid $60,000 more 2 years ago.
And sometimes you do have to take a hit, and you have to kind of, couple that decision with, how quick is it going to take me to move? Because if I price higher if you price higher to try to get money out of it, even though it's not there, what's that going to cost you? Longer days on market, and you might get a less price as well. Yeah. But even throughout this whole process on the last 3 years, right? Since the height of COVID, it's pretty apparent that houses are down 25 to 30%, and that's pretty easy to say, and I think everybody would agree with us right now. But I remember one specific people, and we sold their house in Cambridge, and they were down 10%, and they were like. It was hard to try to explain to them that this was losing 10% was one of the best things that could have happened to them, because most people are 25%.
Yeah.
Right?
I mean, we see some of the guys and girls we've worked with that bought in February of 2022 at the absolute peak, and again, I've seen some of my clients and some colleagues of ours who they bought townhouses in, let's say, Kitchener for 1.1, and now the same ones are selling for 800, right?
Yeah.
It's if you bought in the absolute peak, you're absolutely correct to say 25-30% is a good estimate to say how much you'd be down.
And then
right?
if you bought in 20 at the beginning of 2021, you had the increase,
Yes.
but then you had the decrease.
Yeah.
So chances are you're par.
You're par.
It's just if you bought at the absolute height,
Yeah.
end of 2022, or sorry, beginning of or end of 2021,
Yeah.
beginning of 2022.
Mm-hmm.
So that's interesting. So just across the board, okay. So for everybody out there that's watching this, we look at months of inventory. Okay, we look at months of inventory to decide whether we're a buyer's market or a seller's market. And you talked about Guelph is 3.3 months of inventory. Like Guelph-Aramasa, which includes Eden Mills and the Rockwood area in the country, is sitting at about 4.6 months of inventory. We have Halton Hills, which includes Georgetown and Acton, is 4.3 months of inventory. Milton is 4.2 months of inventory. And Mississauga is sitting at about 5.5 months of inventory. So, like I said, some of the larger cities have more inventory than the smaller communities. Guelph is actually faring quite nicely because it is on that border. If it starts to get under 3 months of inventory, then you're a seller's market, right?
Yeah.
2 months of inventory, somewhere around there.
Yeah.
Now, if we look at price, how the prices are doing overall, sometimes the average price point really hard to indicate what's really happening. So we do refer to the home price index. So when we look, like if I look back in Guelph, for instance, the home price index over the last 12 months says that Guelph prices are down 6.3%. Over the last 6 months, they're down about 1.1%. But over a 12-month span, they're down 6.3%. So we're seeing that anywhere from 6 to 11% decrease in the prices from this year to last year. So like Halton Hills, we see a decrease of about 2.3%. In Acton, we've seen 4.7%. And then when we look at Milton's kind of hard because, it's over the year, it's closer to 8% down.
Yeah.
Right. And Milton seems to be hitting really hard on all of our numbers. But like I said, it is a range depending on the area. So if you guys are out there and you're wondering about your house and your area and the numbers, you should really get your real estate professional to download the numbers, pull them off, make some sense of them, and tell you what's going on. Okay. Like we said, price point is one of the most important things right now, just because there are a less supply of buyers actually looking. Okay. So it just doesn't make sense for someone to just, here, I want to list my house for this, and then the agent puts it on. The agent's got to tell you, hands down, whether or not that we were wasting your time. Right? I honestly believe that's what we're here for.
Yeah.
We're here for our time and our expertise. So then Mississauga, I said that 5.5 months, and then Mississauga down over 12 months is about 3.3%. So the biggest takeaway from this, and we have gone through a few areas, right? We've gone through Guelph, we've gone through Rockwood, we've gone through Erin, we've gone through Halton Hills, which is Acton and Georgetown, Milton, Mississauga. All these areas that, we don't trade in the Milton and Mississauga area very much, but we do a lot of country properties as well. And the biggest theme is that sales are down anywhere between 25 and 41%, okay, depending on where you are. Now, that'll change based on the type of property.
Yeah.
Okay. And then inventory is up in most cases, right? So I just think it's important for everybody to know about inventory, which is why we kind of jumped on here, is that inventory has been slightly increasing, but we actually saw more of an increase in most of these areas in inventory from 2023 to 2024.
Yeah.
Right? Versus the 2024 to 25. But now all of a sudden, we've got, it's starting to balloon, right? And then we've got we had the election, right?
Yeah.
And then the tariffs, and everybody's hanging on these interest rates. So, I do think it's important that people know that. And then the next thing too, when we close, I just want to talk about list price to sale price. When it's priced right, we are getting 96 to 97% of list. But what's the biggest anomaly that we are seeing in the listing side right now? list
Oh,
price.
Cancellations. Oh gosh,
I put you on the spot here.
I'm zoned out there. Yeah,
so talk about cancellation.
Yeah, I mean, so especially when something isn't priced correctly, what we see a lot of agents do is they have that initial conversation with their clients. They say, the client says, I want 1.1. The agent says, let's list it for 1.1. In reality, that house is, let's say, worth $1,050,000 or $1 million. So they'll wait, depending, 2 weeks, 3 weeks, 4 weeks. They'll cancel that listing, and then they'll relist it at that lower price, and then it'll sell again anywhere between 96 and 98% of list price.
Yeah.
The problem is that cancellation skews the entirety.
And it skews the days on market.
Yeah, skews the days on market. So if you look at Guelph days on market, I'll say it's like 20 days on market average in Guelph. It's just absolutely not true, right? That's a lot lower than it is because it doesn't take into account everybody who's canceling, let's say after 15 or 20 days when they haven't sold, and relisting at a price that's more reasonable.
Yeah. Right.
So it really skews the market in days on market. It skews list price. It skews all the numbers a little bit. And unfortunately, in our back-end system here, they don't account for that yet. Yeah. Hopefully soon.
Well, we know cancellations, right, across the board are up around 60%.
Yeah.
So either someone will cancel and relist, which we call that, relist it. Yeah. You cancel it, and then it comes up new on a new listing at a new price.
Yeah.
Or they're just canceling it and taking their house off the market because they can't get what they want.
Yeah.
Right? That's a really big anomaly that we see. And the other thing is associated with that is buyers are starting to get smart where they're not offering on properties right away. They're waiting that 2 weeks to 30 days because they know that if it's not going to sell, and if it is priced high, then that's a dropping rate. It's like 2 weeks, 30 days on market, you drop that price.
Yeah.
Right? And we always, I have a friend of mine and he's an agent, and he always says, if you've had 10 showings and no offers, drop the price. If it's been on for 10 days and no showings, drop the price.
Yeah.
And agents are a little bit more vocal about that now, or at least they should be. I know we are. If sometimes the price is overshot or we're basing a comparable off a couple months ago, then we'd put it up and then we have to make those adjustments. So for everybody out there too, you don't need to worry, like those adjustments are happening. Right. Yeah. And you don't have to worry about how it's going to look on the market. You should price it right to begin with.
Yeah.
But if you do have to drop it, you should drop it, and you should drop it quickly.
Yeah.
It's very, very important.
I mean, the classic buyer saying is, you go show them a house, they like it, they think it's priced high, they say, let's see how long it sits and then we'll offer.
Yes. Yeah, let's keep our eye on it.
Yeah.
And then when it comes down to a price that's kind of hard to ignore, then they buy. But if you price it at a price that's hard to ignore, that's when all of a sudden we're getting these sales right away.
Yeah.
Like we just put in an offer on a property and it's been up for 2 days.
Yeah.
Right?
Yeah.
And that's the difference with this market. And that's why people say, very hit or miss market.
Yeah.
You're not getting that high end. Like if we give you a range on a high end of the threshold, you have your high, your middle, and your low. You're here.
Yeah.
That's it. I can tell you that right now, unless you've got something that's so unique that's hard to ignore.
Yeah.
So good. All right, guys. So, hopefully everybody gets a good indication of what is happening with the market. We are skeptical on the tariffs, on how they're affecting real estate versus how they're actually really affecting real estate, and what the perception is in the media, but time will tell on that one, and hopefully we stop these pauses and we get everything figured out. But at least everybody out there, the key to take away on this is most of the markets are very similar. Some markets are outperforming others, but have that conversation with your real estate professional, and don't be afraid. Like the pricing, if you the last sale sold here, right, you could be right here. Right. And then it moves. The top dollar that everybody's talking about isn't there at this market.
Yeah.
And you're happy to get showings and you're happy for a property to sell versus, I'm going to shoot for the stars and get my price.
Yeah.
Okay. So once again, any questions, any concerns, if you want to be filled in on what's happening with the market, you give me a call, give me a text, or give Phil a call and give him a text as well.
Give me a call, give me a text, anytime.